The report was.
All right. Hi, everybody. I'm really excited to start on hosting of this webinar. We're just going to wait another minute as everybody joins, and we're going to get this going. All righty. All right, we're getting quite some attendees to come in here. If you guys can just post in the chat where you guys are joining from, just good to see where everybody's posting in. I believe we got quite an audience in New York, and I guess we'll get audience we got some other states as well.
Welcome, everybody.
Chat is disabled. Right. There is a Q&A. The Q&A is open. Let's see if we can get the chat.
A lot of familiar names there. Welcome, everybody.
Okay, everybody can chat. I just enabled the chat. Sorry about that. So the chat is on. Oh, we got somebody from Jerusalem. How exciting. Hope you're safe. All right, we got Canada, Jerusalem, we got Alabama, we got Muncie, my hometown, and I guess we got Williamsburg, Isaac's hometown.
New York.
New York. All righty, Monroe. Okay. All righty. Miami. Beautiful. Beautiful. Maybe somebody from the Keys as well. All right, we'll give another 60 seconds and then we'll let you take it off. All righty, guys. Hi, everyone. My name is Nachman Leeser. I'm the CEO and founder of ConnectBooks, and I'm excited to have Isaac Gross, the founder of IGPPC, join us today for this amazing webinar discussing ad spend, ACOS, tacos. Isaac will take everything away. Just introduction, I've known Isaac already for many years, and Isaac is an expert and a master when it comes to PPC. I'm not saying this what Isaac told me. I'm saying this from people who I know who use Isaac, and we share a lot of clients and people I spoke to who told me how happy they are with his service and what an expert he is and how he helped them save money. So it's very important. And as an accountant, I really am not the marketing genius when it comes to keywords and all those stuff. I leave that for the other people. But what I do want to highlight is that I always like to look at what the big expenses are in the business and how we can save money and how to make sure everything, runs efficient and runs the right way. And that's really where Isaac comes into play. Because I can tell you, look, you spent this month $300,000 on ads. Did you have to spend that kind of money? Yes or no? Maybe if you could have done it for 250, you would have saved yourself $50,000. You would have made additional $50,000 profit. And I don't know those answers. And that's why we have today Isaac. And Isaac will be the one to tell us. Isaac, take it away.
Thank you so much, Nachman, for having me. I'm very excited to be here. As you said, we have known each other for quite some time. We share many mutual clients. And like I said, just like PPC is one of the most one of the highest costs of an Amazon business. And it's extremely important that it's run efficiently. So first of all, welcome, everybody. I'm very excited to have you on, especially in a busy Q4 day, right? We have approximately another 10 days until all the products will have this arrives after Christmas tag, where the season will be officially over, Q4 of 2023. So I appreciate you all coming on today. So what we're going to discuss today is what are the key metrics that you should analyze in your Amazon business. So there's obviously tons and tons and tons of data points in an Amazon business, and you should constantly look at them as well. But there's something called paralysis by analysis, which is a term coined that when you have a lot of different data points, sometimes when you look at constantly at all of these data points, you sort of get paralyzed. Like you don't know your next action that you will take after analyzing all this data. So it's very important to be able to dive really deep into your account and all the metrics, but it's also important to know what are the key metrics that I need to look at week over week or month over month. So I have over here 4 metrics that I think these are the most important metrics that you need to analyze, again, either month over month or week over week. And I'll explain why they're very important. Okay, so the 4 metrics are total sales, ACOS, TACOS, and organic to PPC ratio, which means what % of your total sales come from organic and what % of your total sales come from PPC. Now let's go through quickly all these 4 and explain why they are and why they're so important. So number 1, total sales. Obviously, you want to see the amount of sales you had this month versus last month, or again, week over week. And you want to analyze if it increased, decreased, if it stayed the same. So just a quick note on that. We have this a lot of times where you see on a certain account, hey, my sales dropped. And you get anxious. What's going on? Why did my sales drop? So the first step that we usually do is you want to compare not only month over month, you want to also compare year over year. So you want to see, okay, so for example, I think right now is a great example. Most of you sellers will see a drop in January versus December, right? December's Q4. Again, some sellers actually have their season in January, but a big % of them have it in December. So when you'll see a drop in January, you won't be concerned because you know that December is a better month than January. So every time you analyze your sales week over week or month over month, it's always important to also compare year over year. How did we do last year, this week versus a week before, or last year, this month versus a month before? And maybe this drop in sales or increase in sales, whatever you're seeing, is part of the trend. So that's number 1. When you see drop in sales, first compare it to year over year to make sure that this is part of a trend. If not, that's when you should be concerned. The second thing you need to do is, and that's especially important for larger accounts, and these are usually typically the accounts that we manage, you want to break it down on a product level, right? You can't just look on an account, sales increase or decrease. You want to break it down into on a product level and see, okay, what are the products that had an increase or decrease in sales? And then, of course, you need to dive into why that happened. And that's beyond the scope of this webinar because you literally have tens of data points that you can look at and analyze a product. Maybe we'll touch some of them at the end, but you first want to, number 1, diagnose it to which product the sales actually, the drop or increase happened. So that's total sales. ACOS, I think we all know what ACOS is, but I'll say it in case somebody in the audience doesn't know. ACOS is what % of your advertising sales did you spend on advertising. So let's say somebody spent $10 in advertising. This $10 brought them $100 in sales. That means you have a return of that means you have an ACOS of 10%. Okay, that means 10% of your total of your advertising sales is what you spend on the advertising. That's ACOS. TACOS is an even more important metric, is what we call true ACOS or total ACOS, which basically means what % of my total sales that I spend on advertising. So let's say we spent $10. This $10 brought us, let's say, $50 in advertising sales. That means that's an ACOS of 20%. But if total sales we had $100, that means our TACOS, the % that we spend of the total sales, is 10%. And why that is important, that's even more important than ACOS, is because TACOS is basically the advertising dollars are supposed to bring us organic sales as well. So even though sometimes your ACOS might be high, if your TACOS is a healthier number, you should be fine with that because the advertising dollars, advertising sales actually fuels your organic sales. And you can't just separate the two and look at organic sales as a totally separate thing of your advertising dollars. So that's TACOS. And then we have the organic to PPC ratio, which is what % of your total sales come from organic and what % of your total sales come from PPC. And that is a very important metric, and I'll share my screen to explain why. So I'm going to give you right now 2 scenarios where an account has an increase in TACOS, okay? Your TACOS increased, let's say, from 50%, let's say month 1, to month 2, it increased to 20%. And I'm going to give you 2 scenarios how that could have happened. And the interesting part is, in one of these scenarios, your ACOS will be exactly the same. So that means technically, if you just look at ACoS from an efficiency standpoint on your advertising dollars, your ACoS is still exactly the same. But because the PPC to organic ratio shifted, that had a big effect on your tacos, and that's why you had an increase in tacos from 50% to 20%. That's why the organic to PPC ratio is a super important metric to look at. So let me share my screen. Nachman, can I share my screen?
Sure, you should be able to.
Beautiful. Okay, can you guys see my screen? Nachman, can you see my screen?
Yeah, we see your screen.
Okay, so let's take over here. So this is, let's say, month number one. We have total sales of $100,000, PPC sales of $50,000. ACoS is 30%. Tacos is 15%. The PPC spending is $50,000, and the organic to PPC ratio is 50%. So you see over here, the total sales is $100,000, and 50% of that, $50,000, comes from PPC sales. Okay. Now, the next month, look at this. We had our tacos jumped from 50% to 20%. And I want to make a point. Tacos is not like ACoS. Your ACoS goes from 30, let's say, to 35%. That's not that big of a deal that when your tacos goes from 15 to 20%. Every percent in your tacos is a full percent taken off of your bottom line of your profit margin. So let's say you have a profit margin of 15%. If your tacos goes up by 1%, your profit margin will shrink by full percent to 40%. So obviously the tacos is a very important and a very delicate metric. Like even a small percent is actually a big deal. So in this case, our tacos went from 50% to 20%. Okay, so let's analyze what happened over here. Total sales is still the same, $100,000. Obviously, the PPC spending is up, and it's up from $50,000 to $20,000, okay? But that's the interesting part. Our ACoS is still 30%. That means our $20,000 that we spent last month, our $20,000 that we spent just like last month is exactly the same efficient. Like your PPC, the ACoS is 30%, meaning your advertising dollars that you spent, if you look from an ACoS perspective, looks beautiful, just as good as last month. But here's what happened. Your percentage of sales that came from organic shrank. That means in this case, 66% of your total sales are coming from PPC. So over here, 50% of your sales came from PPC. Over here, 66% of your sales came from PPC.
So it's very, Isaac, what you're saying is very important to understand that when your PPC spend moves up, making sure that your organic sales is not tanking, meaning there's two ways to generate sales. One's through organic and one's through the ads. You want to make sure as your PPC spend moves up, even if your sales move up or down, you want to make sure that the ad sales is, meaning that your organic sales is not shrinking down. And for this, actually, you know, as even spoke to Amazon about this, there's no actual report in Amazon that's going to tell you how much organic, how to find organic sales, but we can discuss the, you know, at the end of the webinar, we will explain how to find that.
Right. I mean, the whole tacos is not a metric that Amazon shares. You have to pull it together, you know, by a few reports and create it for yourself. So as you mentioned, Nachman, over here, your PPC spending increased, and from an ACoS perspective, it's exactly the same efficient, but because a larger percent of your total sales are coming from PPC, that's something you need to analyze and look into this, what's going on. It could be a lot of different reasons. It could be that you were spending more, but you were just cannibalizing organic sales, meaning you were just basically stealing organic sales that you would have gotten anyway. Or it could be that one of your products lost organic ranking, and that's why you have less organic sales. It could be a lot of things. But the point over here is that if you wouldn't have looked at this metric, organic to PPC ratio, you would have been a little bit confused, because ACoS is exactly the same. So why is my tacos 20%? What happened? What caused this? Because if you look at this organic to PPC ratio, you'll understand it. That will give you some insight, again, that either your increase in spend didn't result in more organic sales, or it could be that, again, from a different angle, a different product had a drop in organic ranking, and that's why you have less organic sales. It could be, again, a ton of other different things, but the point is, I want to keep it high level. It's a very important metric, organic to PPC ratio. So let's look at scenario number 2. Okay, again, so our tacos went from 15% to 20%. We still have $100,000 in sales. The PPC sales are still 50%, just like month number 1. Our ACoS is up 40%. Our PPC spending is $20,000, and the organic to PPC ratio is still 50%. So see over here, okay, you can very clearly analyze what the problem is. We still have the same amount of organic sales and PPC sales as a ratio, still 50%, but my tacos is up from 15 to 20% because my equals is up from 30 to 40%. So in this case, our advertising dollars became less efficient because in month number one, we spent $15,000 to get $50,000. In month number two, we needed to spend $20,000 in order to get the $50,000 in sales. So if you see that your account, your tacos is going up, and it looks more like scenario number two, the first thing you should look at is your ads, your PPC. What's going on? Why did my ACOs go up? And again, this can also be very different things what's causing your ACOs to go up, but you first know where to look at. So keeping it high level, these are the most important metrics that you should look at. Again, either week of a week, month of a month, by us depending on the account. Some accounts are more volatile, they're changing more. Some accounts are more stable, but these are the main metrics that you should look at and have a full grip on. And this will help you diagnose and catch the problem that you see happening. Again, of course, every metric that you see, ACOS, tacos, the PPC, organic to PPC ratio, all of these, once you know what the problem is, there are a ton of other data points that we constantly analyze to see why did it happen, how did it happen, and how can we fix it. But high level, these are the main metrics you should look at, analyze. You should be able to have it on your phone to view it, have it handy, and making sure that you have a good grip on your business.
All righty, Isaac. Thank you so much. This information was very informative, and thanks for sharing these amazing insights. So before I jump into the ConnectBook side, I do want to share that we will have a Q&A session after we finish. So if anybody has any questions or any stuff you want to address directly to Isaac, just post it in the Q&A chat, not in the regular chat, post it in the Q&A, and we will respond to every single question. Additionally, I do want to mention that there will be a list that Isaac will be sharing. We did prepare a ratio which will show certain reports that ConnectBooks does, but there is a certain metrics that Isaac uses, a Google Sheet that he uses to monitor results. And as a gift to people who are attending the webinar, we will be sharing this towards the end of the webinar. So stay tuned to focus towards the end of the webinar.
Nachman, should I briefly explain what I will see in the sheet?
We're running tight on time. I think let's see how.
Okay.
So I'm gonna jump in out to the next step. So what we're gonna be sharing now is we're gonna be covering what Isaac has basically explained. So Isaac was explaining a lot about having the ACOS and the tacos, making sure that you're not, making sure that
want to make sure that we have a good grip and we see an increase or decrease in ACOS and tacos week over week, month over month, to understand our main metrics. And also, we want to do this on a product level, which I think you guys have a beautiful report for that, right?
Correct. So what we're going to basically be covering is we're basically going to take all the hard work that Isaac does and the metrics that Isaac looks every single day to make sure that accounts are growing in the right direction, make sure the accounts are profitable. We're going to show how ConnectBooks can completely take that and just automate it in. So before I begin, I'd like to give a little more example, and this will highlight on what Isaac was talking about. So the first thing is the art of the comparison. And the way we built our reporting tool is based a lot on comparison. And what is the art of the comparison? So the art of the comparison is, and I'm just going to share a very personal story, but I'm going to make it really quick. So the personal story is that when I hired my first employee and I started out my business 6 years ago, I thought everything is amazing. I thought I got someone to take some work off my plate. I had I got back 2 hours of my time and I was like, wow, this is amazing. Then when I hired my second employee, I literally saw that the second one was actually able to accomplish 5 times more than the first one. So all of a sudden, that whole view that I had that the first employee was so amazing, all of a sudden, that whole view went away. That whole thing diminished. What I took out of it is that you don't know what good is until you see what bad is. Sometimes you look at something and you think this is amazing. Wow. For example, you're looking at a product, you're looking at the profit margins, you're looking at the 8 course, you're looking at the tacos, you're looking at your metrics, and you think this is it. The answer is, if you don't benchmark, you don't compare it to a previous month, you don't compare it to the previous week, you don't always know what's good and what's bad. So sometimes you have a report that you look at which shows, what's today, which is a very good idea. But what we also want to focus on the bigger picture is looking back and comparing and making sure that we're actually moving up and not going down. So for example, like what are the few ideas that I look into? One thing would be like a repricer, the other things would be ad spend. And what we want to make sure is that when we look back last month and we look back at our numbers, we want to make sure that it's not just that sales are increasing, we want to make sure that the profit margins are increasing. We want to make sure the profit is going up to the right direction. And what you want to do is you want to compare your ad spend, which will be your tacos and your ACOS, you want to compare month over month. So you want to take these two numbers and you want to constantly keep comparing to goes off. So over here, we're going to show you how we built out a report, and we're showing you where you can even see the sales numbers actually match back 1 month to the next. But if you look at the profit margins, you see they differ a lot. And a lot of it has something to do with sometimes people pull up the price, sometimes people pull down the price, and sometimes it has to do with they increase their ad spend and they decrease their ad spend. It has a lot of different variations how you get to your proper profit margin every single month and how it moves up and how you move down on it. This is, for example, a different case where you can look on the ad spend. This was a scenario, I think, on somebody did like more on Prime Day, where they thought that if they're going to increase their ad spend like crazy, they're going to actually make more money. And if you look at the profit margin, you see that in the month, on the 10th, they actually made less profit than they made in the day before. And if you look at their ad spend, they doubled their ad spend and what happened was they also ran certain coupons, they ran certain fees and a lot of different stuff in order to increase the sales. But it happens to be that their top line went up double, but when they compared it to the day before, you actually see that they didn't make more money. So this is really where the art of the comparison comes in. And this is where all these stuff, having the proper metrics and knowing, for example, what to look at and assert on every single day, and then comparing the results from one day to the next, that will show you, how that account is performing, and what are the things you should be looking at. And the other thing is, for example, this is a different scenario, which also having compare where somebody actually they went and they moved up the price or moved down the price. What happens, which in this case, the customer actually took the price from $35 a unit to $30 a unit, and their profit almost doubled. Now, what happens to be, a lot of it has to do with the ad spend actually also decreased, and it didn't decrease, it actually decreased slightly, but the sales also went up a lot. So it had also to do with basically, if you lower the price, sometimes products will sell more. That's how supply and demand works. So in this case, they lowered the price to certain stuff, which actually brought in more sales. But the question always was, did the profit go up? So by comparing these two timeframes, by taking 1 month, comparing it to a different month, and seeing the different results, you'll be able to see how how your profit moves along and how things go on that case as well. And here's, for example, the same thing. You can look, for example, at a certain account here. You see that on one time frame they did 76,000 sales, and their profit was 15,000. And then if you look at a different time, they did 150,000 sales. They literally doubled in sales, but the profit margin was actually the same. So sometimes it's not about always moving up the sales. Sometimes it's about having better control on the ads, or better control on the fees, or better control on the coupons. Whatever you're moving up or down, you always want to make sure that your profit, stays within line as you're comparing your results. And this is where the same idea goes for the ACOS. So by a lot of these features that we built out here on the ad side to comparing is what Isaac has helped us and guided us how to do this in the proper way, how he analyzes his accounts. So for example, over here, where you see right over here that you have on 11/20, you actually see that the ad sales were 35,000, and then you see the next week the ad sales actually doubled, and you see also the PPC spend doubled, but the organic sales shrunk a lot. And this goes back to tie back to what Isaac was explaining. So what Isaac was explaining before, how to be on top of the metrics and how to get the ad sales and make sure that as the tacos goes up, the ad sales doesn't go up. That's exactly what you're saying. So there's an option where we will share a sheet and, you can try to manually pull this data points together, or you use a software like ConnectBooks, which automates all this and gives it to you in 2 seconds, gives you these numbers, and these get updated every single day. But, and these are the metrics that you want to be on top of to make sure, for example, in this account, if you look at the week before, 116,000 in sales, ad spend was 11,000. Next week is 108. Ad spend is 21,000. And you can see right away that the organic sales shrunk drastically. I'm not sure, that part and why it shrunk and how it worked. That's something that Isaac will probably be able to diagnose better. And now there's something that I want to add on, which Isaac didn't talk it about, and I think Isaac will be able to elaborate a little better, is we're having another few new features coming on next week, which these new features are not yet available on your ConnectBooks account, but these were something that Isaac will be able to go on describing is the buybacks percentage. That's one feature adding on, but these are the other three. The main one Isaac asked for is page reuse, sessions, and conversion rates. So what happens is a lot of times, if let's say your sales drop and you want to understand the differences in drops, is sometimes it can have to do with page views or sessions. Isaac, you want to elaborate on this a little bit?
Yes, I want to go this over, and this is actually the main thing of the sheet that we shared. I also want to give a quick shout out to ConnectBooks. They talk a lot to our team, and they really want to understand the metrics that sellers are looking for, especially, again, what we're talking about is PPC, analyzing drop in sales. So kudos to you guys, you're doing a good job. And the sessions that conversion rate is something that we ask you should add because we have many clients using ConnectBooks and I wanted them to have it. So I'm excited that you're going to add it. So one of the most important things, we have it a lot with accounts, we see, let's say, a drop in sales, right? So the most important thing is to analyze why is there a drop in sales? What happened? So if you have a larger account, the first thing will be, let's find the products that had a drop in sales, right? Every account has tons of products, again, for larger accounts. So you want to, it's not an account thing, it's a product thing, right? So we first want to break it down. What are the products that had a drop in sales? Once we know the products that had a drop in sales, we want to, the first thing I look at is why did the drop in sales happen? Was it due to a drop in traffic or a drop in conversion rate? So I'll give you a great example. We had literally yesterday with one of our clients, they had a drop in sales. We analyzed, we compared the two time periods, which was actually this year versus last year. And we saw that they had even more traffic this year, but they had their conversion rate was basically down 50% versus last year. Okay. So
what does it mean when the conversion rate is down? It means they have like to optimize their listings.
So first, just again, in case somebody doesn't know, conversion rate is what percent of your total of the people that come to your listing buy. So let's say you have 100 people coming to your listing. Of these 100 people that come to your listing, they click into your listing, what percent of them buy? If you have 10 people buy, that's a conversion rate of 10%. If you have 20 people buy, that's a conversion rate of 20%. So that's actually a very important metric to constantly analyze. So let's say in our scenario, okay, this product, let's say last year had 100 sessions. So basically sessions in the business reports means like clicks. It means 100 people came to your listing. I wouldn't look much at page views. Session is more important because if there's one customer that looks twice within the same 24 hours, it's considered 2 page views and 1 session. So I always want to see how many
session. So a session basically means how many users actually come to see your product.
Right. How many users, how many shoppers, Amazon shoppers saw your product again today or whatever the time frame you're looking at. So in our case, this product we were looking at had, let's say, 100 sessions last year, which means 100 people came to the listing. This year we had 200 sessions, which means traffic, again, which is usually organic ranking and PPC, traffic was more people came to the listing, but the conversion rate was down by over 50%. So if the conversion rate is down, let's say by over 50%, that means that even you have double the traffic, you will still have less sales than last year because your conversion rate is down. That means
what would be a typical issue like a conversion rate would be down? Like, why would that happen?
Okay, that's a loaded question. It could be a ton of different things. It could be number one, your price went up, or it can be the price of the market went down and your price stayed the same. It could be your listing, your main image is bad. It could be your ratings. Let's say went from a 4-star, from a 4.5 star to a 4-star, or from a 5-star to 4.5-star. One of the I'll actually share one very interesting thing that we see a lot that affects conversion rate that people don't notice it is if your lead time becomes a week or two. So many times we'll analyze a product, we'll see the conversion rate drop like off a cliff from one day to another, and nothing on the listing changed. The price is the same, ratings are the same, nothing happened. And we see that, let's say, either in New York or in the West Coast, we'll usually test it in incognito from a California zip code. We see that your product,
even if it's FBA, you're talking about meaning the lead time can drop as well significantly.
many times, yeah, because number one, it might be that Amazon didn't distribute properly your product yet. So let's say somebody orders in the West Coast, it's not in a warehouse close to them, so it could take let's say a week for the product to arrive. Sometimes even like 3 or 4 days can have a huge impact, because Amazon customers today, especially for certain, simple commodity everyday products, people get it 1 day shipping, sometimes same day, or 2 day shipping. So even sometimes if your product will have a lead time of 5 days, that will greatly impact your conversion rate. So again, it could be price, it could be your listing, it could be the rating, it could be shipping lead time, it could be many other different things. It could be competitors are doing a lightning deal. It could be many different things. Again, we have a whole list internally what we check when the conversion rate drops. But we know that it's a conversion issue, okay? But now, what if you compare the drop in sales? You see conversion rate is the same or even better, but we have less traffic, then it's a traffic issue. So of course, number one thing in traffic is PPC. How much are we spending at PPC? Are we sending the same amount of traffic this period versus the period before? That's why in our sheet that we have, we also have the PPC spend and clicks. We want to see from a PPC standpoint, do we have less clicks or more clicks? And if you have the same clicks or, not significantly less, that means it's not something in the PPC. It could be organic ranking. So that's why we track for main products, we track organic ranking. We just see, okay, I see that on this keyword, on that keyword, you had a drop in organic ranking. The point is, we always want to analyze sales. When we have a drop in sales, we want to analyze, is it a traffic issue or is it a conversion issue? And again, once we diagnose what the problem is, either traffic or conversion, again, we have tens of different data points that we analyze on each of those to see, okay, what happened and how can we try to fix it if it's a fixable thing.
Wow, amazing.
And I'm very excited that you are going to have it because I think that's a very useful report for your customers to be able to see and analyze it in a nice chart. You should be able to compare any different time period you want, a week of a week, month of a month. So I'm excited for that.
Cool. Thanks, Isaac, so much for sharing all this information. We are going to go now into our Q&A session. Isaac, there is one question for you. How do you measure this on a target level? Sarah posted a question. How do you measure the latest point Isaac talked about? She posted it 15 minutes ago. If you could just elaborate on it on how to measure. I'm assuming the question is between the ACOS and the TACOS, how to measure that on a target level.
I'm not sure I understand the question. TACOS is not in the target level. ACOS, you see the ACOS, so I'm not exactly sure what the question is. Again, was asked, I don't know.
All right, what is considered a good ACOS and TACOS percent? What would you say, Isaac?
It's a tough question. I have clients that have an ACOS of 60%, and I have clients that have an ACOS of less than 2%. I always say a good ACOS and a bad ACOS is all relative. The question is, how good of an ACOS? What's the best ACOS possible to have for this account? By the way, and that's not an easy question to answer. It's very complicated to know on an account if the ACOS is good or bad. I think it's beyond the scope of this webinar, but again, just for the sake of generalization and give a general number, anything between 20 to 30% is considered a good ACOS. And the same true with TACOS, but I want to explain something, by the way, with TACOS. TACOS, the average number people throw around is between 10 to 50%, 50% on the higher side. But I want to explain to you something. Number one, if your account is not profitable, then even if you have a TACOS of 2%, I mean, that's not considered a good TACOS, right? Because you're not profitable. If you have a 15% TACOS and you're profitable, 50% might be good for you. The question only is, can it be 10%? And every market, it depends how competitive it is. It also depends what your goal is. If you, for example, if you're launching an account and your focus is to grow sales, then a higher tacos is completely normal. If you're focusing more on profit, then a lower tacos is acceptable. So it's really, it's like there is really no clear answer to say what is a healthy tacos. Again, the normal people throw around that we see by our clients as well is, I would say, really more between 5 to 15%. People say 10 to 50%, 50% on the higher side. But again, if you're at 50% and you're not profitable, that's not an acceptable tacos. The question is, can it be better? Maybe when you lower your ad spend, your sales will drop, and your account will start go downhill completely. Again, it really depends on every account, which stage it is, and the category it is.
Very insightful. Is there a way to increase sales without ads? Isaac, what do you say about it?
So 100%. So we spoke about traffic and conversion. So for example, by the way, I always say, and I preach this to my team, I'm not a salesman for Jeff Bezos, okay? Even though we're an advertising agency, I'm the happiest person if I could tell a client, hey, let's cut your ad spend by 50%, you'll be more profitable and you have more sales. So I'm not like I'm not always advocating for people.
But what would be like a way like people increase their ads with, like what would be the most?
Second, I want to answer that question, Nachman. So how can you increase sales without increasing PPC? The answer really is conversion rate. If you increase your conversion rate, that will help, number one, the same amount of people that come to your listing, you'll have more sales. Because let's say you have 1,000 people coming a day to your account. If you increase your conversion rate from 10% to 12%, that's a 20% increase, okay? That's huge. And how to increase your conversion rate? Main image, again, your listing basically, your price is a big factor. So there are a ton of different ways to increase sales without PPC, but PPC is one of the strongest factors, one of the strongest levers to use when you want to increase sales.
Amazing. Okay, we got the next question over here. Should I spend on ads if I don't sell private label products? What do you say to that, Isaac?
Okay, so this is also a very loaded question. So number one, like this, if you're exclusive and you have your own listing, then the answer is yes. If you have a bundle, let's say, the answer is, again, I say the answer is yes, that's only if you need it. So if you have a product, by the way, that sells without PPC and you rank number one on every keyword that somebody's searching for, I don't think that you need PPC. It's product dependent, but if you have a product, let's say it's a brand name, people search it, they find it, you don't need PPC. Again, if you're not sure, you might test it for 2 weeks, see if you had more sales, and as Nachman pointed out, not only more sales, but more profit also. So if you have your own listing, the answer is more likely to be yes. If you don't have, I don't know, some people say when you spend more on PPC, you get the buybacks more. Honestly, that's not what we do. 99% of our clients are either private label or have their own listings, even when they sell branded products. I don't think we do. I don't think we have many clients doing PPC for products that they share the buybacks. Again, people have said that you get the buybacks more. I'm not sure. I don't know. That's not what I do.
Next question is, how can I find the Ecom and the tacos data on Amazon? So I believe we pull that from the ad reports under the campaigns. Is that where you find the Ecom?
Yeah. So I want to say that again. Ecom you have in the ad reports or just in the ad console, you'll see Ecom on a campaign level. They have it on a product level. Sorry.
And the tacos are just the tacos is a simple calculation, no?
Right. So the tacos is something that you can't. Amazon doesn't share the tacos, so you need to see from Amazon, from the business reports, your total sales, and you need to take the data that you how much you spend from the advertising and make the calculation. Or use ConnectBooks and you'll have the data at your fingertips, easily available.
Yeah, it's available easily, but the Ecom and tacos are very two simple calculations. The way I would break it down is both of them focus on the ad spend. The difference is that the tacos will be the ad spend divided by your total sales. So if your sales 100,000 and you spend 20,000, then you're at 20% tacos. Your Ecom is the total ad spend based on the total ad sales. So if you do 100,000 sales, doesn't mean 100,000 came through ads. It could be, let's say, 50,000 came through the ads. So then your Ecom would be 20,000 divided by 50,000. That would be your Ecom. The Ecom percent Amazon does provide, as Isaac said, in the Amazon console under the campaign reports. And the tacos are just a simple metric that you can calculate on your own.
Correct.
And that conversion rate is calculated. The conversion rate is basically calculated based on sessions. So for example, if you have, 100 people coming and let's say 10 people buy, that means you have a 10% conversion.
Yes, I want to point that out. The conversion rate, the organic conversion rate is in the business reports. It's called the unit session percentage. Again, unit session percentage. Amazon gave it like a weird name, but that's basically your conversion rate. Unit session percentage on the business reports. That's your organic conversion rate, and your PPC conversion rate you'll have in the reports.
So these separate conversion rates for organic and separate conversion rates for the PPC.
Correct. Amazon gives you the conversion rate on your ads, and Amazon gives you the overall conversion rate on the product.
Cool. And then next question is healthy organic. They want to what would be a PPC percentage ratio? So what the way Isaac, according to your example before, you showed us, let's say somebody does 100,000 in sales, 50,000 in ad spend, and then 50,000 ad sales, it's have 20,000 ad spend. So they have a 50-50 ratio. What would you say is a PPC percentage ratio?
Okay, great question. So as with most questions when it comes to PPC, the answer is it depends. But for managing hundreds of large accounts, what we see a ratio that I'm healthy, that I'm comfortable with, is 60% organic, 40% PPC. It used to be actually 70% organic and 30% PPC, but over the years, Amazon released way more sponsored ads, slots on the first page, and they've taken away a lot of organic sales. So the ratio that I'm comfortable with is 60% organic, 40% PPC. But if you go home and you look at your account, you see, hey, I have 40%, let's say, organic, 60% PPC, you have a healthy tacos, there's nothing wrong with it. Meaning to say, also, usually more expensive products will have a higher percent of sales coming from PPC. It's really depending on the category, but again, if you want a general number, what we see is 60% organic, 40% PPC.
Okay, next question, slight tangent. Is there anything to do to prevent the lead time issue? As you mentioned before, as an example of a dropped conversion rate.
So it's a great question. I'm honestly not an expert at it, but Helium 10 released a tool. I think it's called the heat map. So you can see where your inventory is distributed across all the fulfillment centers. So if you make sure that when you send any shipments, you send it to a few different locations, to the West Coast and the East Coast, then usually you should have inventory in both.
Most people don't want to do that. Don't most people try to send it to one location so that they save themselves on the shipping fees?
Right. So that is the issue, that a lot of people try to outsmart the system, but sometimes they get a hit from this side that they don't have the inventory in the West Coast, let's say, and they want to send it over here.
It's a sort of a catch. Either you ship it to all locations and then you have better sales, or you take the risk and try to outsmart the system and try to send it to one location and use other softwares that, specialize. I think like 9 Yards has like some sort of shipping system to send to one location.
Correct.
And people try to do that, but then you risk not having it
inventory across the country. So
someone told me yesterday that if you start to use Amazon's 3PL, Amazon also has their own 3PL. So if you bring in directly from China and you use Amazon's 3PL, then when they ship from their 3PL to the FBA, then they distribute accordingly. Meaning, and you save money on that end. But that's like a new thing I just heard.
Yeah, so I actually have clients that don't use all these software that try to consolidate all the shipments to one fulfillment center for exactly this reason. They say, let me rather send it across the country and to make sure that I have available inventory. And by the way, this doesn't only affect conversion rate, it affects organic ranking a lot. So let's say somebody is, selling a garlic press and they're searching your product, let's say in California, and in California, your lead time is, let's say, 5 days versus your competitors are 1 or 2 days. You won't rank as good for the keyword garlic press as if you would have had inventory available for 1 or 2 day shipping. So we see this, by the way, black and white. If your lead time is late, you will, number one, get a huge hit in conversion rate, and you'll get a huge hit in traffic and organic ranking in that location. So organic ranking is not as black and white as it used to be. You can have one rank in the East Coast, a different rank at the West Coast, depending on the inventory available.
Wow. So the product can rank, the same product, the same listing can rank differently East Coast and West Coast.
Exactly. And the inventory has a lot to do with it. And you can see, by the way, if you search most products, you always see that the first pages are usually products that have same day, 1 day or 2 day shipping.
Wow. So this question is, how is the buybacks an important metric? I think if you're like fighting with a lot of people, like if you're competing with a lot, then I think the buybacks will be
Those,
of
it's
your own
actually,
listing.
it's actually a great question. By the way, the buybacks is not something that we asked you to put on. That's more
No, it
for
was something that we just also got a request from another
right.
big account.
But
So,
right, but I want to add a very interesting thing. I had somebody reach out to me. He's actually not our client, and he reaches out and say, "Hey, Isaac, my sales dropped. Can you please analyze what is going on in my account?" I did him a favor and analyzed it, and I saw that which he didn't recognize that one of his main products had a huge drop in buyback percentage, and we saw that there's a hijacker, and he didn't even realize it. So basically, somebody got onto his listing selling the exact same product. So it is actually a useful report sometimes to look at it as well. Again, we don't look at it that often because we deal with private label sellers that usually don't have buybacks issues, but it is actually a metric that can be useful, especially when you try to analyze a problem and understand, hey, what's going on there? Why did I have a drop in sales?
right. I think that the buyback usually is more for people selling branded products, not private label.
Exactly.
People selling private label usually have their own listing. People not selling private label usually would always fight on the buybacks, and that's more where the repricers and all those other stuff come in.
Exactly.
So as a question, how do I know when to use an advertising agency? What do you think about that, Isaac?
That's a great question. I would say like this. Number one, I have it a lot with people reaching out. If you know PPC well and you have the time to do it, you should do it. If you want to grow your business in different ways and you want to make sure that your advertising is done 100% by people that do this all day, then it makes more sense to use an advertising agency. Personally, ourselves, I turn down probably a couple of businesses a week. People that reach out to me that say that they're starting out. I usually don't take them on because they're not the right fit for us. And I also do believe that somebody that is outsourcing the PPC to an agency, they should know the basics of PPC. So I usually recommend new businesses, learn it yourself, go on YouTube or take a course, make sure you understand it properly, at least enough to challenge your agency or to have a conversation with them to make sure that you understand what they're talking about. And also, a lot of times, let's say an agency tells you that the ACOs cannot be better. You want to understand and why can it be better? If you don't understand the principles of advertising, you will always question your agency. You will not feel comfortable. If you know the principles, if you know the basics of advertising, then it's a big plus when you outsource it. So to answer the question, when you want to grow your business beyond PPC or PPC is not your expertise, you should 100% outsource it.
Amazing. All right. Next question we have. Somebody wants to know if we're considering metric of tacos, so we include all promotion spend. So we don't include all promotion. The tacos we consider is the actual ad spend, but we definitely could break out for you how much the deal fees and the coupon clips are, meaning we do have the ability to break out these fees separately, and we can tell you your total ad spend is X plus your deal fees plus your coupon fees. This is what it will come out to. So we could break it out for you. Next question is, we're losing the buybacks due to pricing and other retailers. I've heard this a while ago. People lose the buybacks because let's say somebody on Target is selling it for way cheaper than somebody selling it on Amazon. Is there a way to get around it? Isaac, you have any insights on that?
So people shared in the past, I'm not sure if it still works. Honestly, that's not something that I deal with all day, but people shared in the past using maybe different UPCs and changing around the title bullet points. So let's say you're selling a Walmart, if you're using a separate UPC for Walmart, and you also change around your title, your bullet points, it's not exactly as the exact same as it is by Amazon. Amazon, might not catch up to it, that it's the same product. I'm not sure if that still works. I believe it should work because there's no way, again, if you change, title bullet points, UPC, there's no way for Amazon to really understand that it's the same product. But again, I'm not sure if it's worth it. It can be a logistical nightmare if you're a large business to have separate UPCs for Walmart and then maybe for other marketplaces as well.
Mm-hmm. The next question is, does ConnectBooks tracks ad sales 1/7 of 14? Yes, we do track it. We do have the ad sales from 1/7 of 14. Just to highlight the difference between 1/7 of 14 is if somebody visits the website, your product page today and buys something today, it will be a 1-day ad. If the person visits your page and they don't buy it today, but they will buy like within a couple of days later, then that will, if it's within 7 days, it will be under the 7-day ad, and with 14, it will be under the 14-day ad. So Isaac, what is the most important one to look at, the 14, 7, or 1?
So usually we look at sponsored products 7 days. Just that's basically how Amazon has it in the ad console. And for sponsored brands, we would look 14 days, just because that Amazon has that in the console. Again, you could say in a way, why not look at the 14 days? Because if your 14 days equals is better, that we could still make the argument that the click that you made 14 days ago, that brought the sales 14 days later. But again, we go usually with 7 days. So 1 day for sure not. But it's either 7 days or 14 days. We go usually with 7 days for sponsored products, just because that's how Amazon made it the standard for sponsored products in the ad console. In Seller Central, by the way, Vendor Central is 14 days, even for sponsored products. And for sponsored brands, we go, and sponsored display, we go with 14 days, just because that's, again, the standard how Amazon has it in the ad console. That's how clients see it in the ad console. But again, sometimes we have it also in our reporting. We can pretty much break it also down by 1 day, 7, 14. But again, 1 day, that's for sure not.
The webinar is recorded, and we will have a recording of this for the people asking. Okay, and to the last question we're moving into, how is it possible that ad spend fluctuates to the previous date? So Isaac, you probably answer this better than me.
You mean that if you go back a day before, you see
the numbers constantly change. We see it all the time. We see it, like, we pull a report from Amazon yesterday. Amazon said, ad spend was 5,000. We pull the next day, it comes back to 6. A day later, I see it takes at least 2 to 3 days to like normalize. It used to be much worse. It gets better, but it still takes some time.
Sure. Okay, so let's wrap it up with this question. So, if your question was about ad spend, the only real answer is that Amazon might detect some of the spend as invalid clicks, maybe as a
like fraudulent clicks,
fraudulent, or even not fraudulent. Even let's say one shopper, click multiple times, Amazon usually won't let that happen. So, and Amazon actually has a report. I'm not sure how the report is called off my head. It's called something like invalid clicks, something like that. So you can actually see in your report that Amazon shares data with you, how many invalid clicks they detected on your account. So that's why you'll see a little bit fluctuations on ad spend. It usually doesn't fluctuate that drastically, but when it comes to ad sales, that usually fluctuates pretty drastic. And that is because of attribution. That means if somebody clicks your ad today, okay, even if they don't buy it, as we discussed over here, even if they don't buy it today, for sponsored products, if they buy it in the next 7 days, Amazon will still attribute that sale, let's say in a week from now, to today's click. Okay, so let's say somebody clicks on your ad today. You come back tomorrow, you see yesterday you only had, let's say, 1 sale, but then within the next 7 days, if that customer still buys, then you will see the sale in the ad console as if it happened today. And again, in sponsored products in the ad console, you have it up to 7 days for sponsored products and up to 14 days for sponsored brands and sponsored display. In Vendor Central, it's always, the attribution is always 14 days, even for sponsored products. Okay, hope I answered the question. Nachman, how do we go about sharing the tool?
Alrighty, everybody. So thanks you guys all for joining. We will send out an email with the recording, and we will include in the email, we will include a link down to load the metrics that Isaac uses. Those are the metrics that Isaac uses to compare and track like stuff that we spoke about, conversion rate. So for example, if you see a drop in sales, you want to know, has it to do with conversion, has it to do with your ACoS, how Isaac analyzed that. Along with that, Isaac will share a video of explaining how he uses the sheet to analyze. So there will be like a Loom video plus the sheet that we use on attach that. And this is a special offer just for people who join this webinar. And Isaac, if people want to get in touch with you, where's the best way they can find you?
They can find me, they can email me, Isaac, ISAAC at igppc.com, ISAAC, Isaac at igppc.com. You can check out our website, igppc.com, and you can follow me on LinkedIn. I try to share a lot of content, no fluff, real actionable insights. So Isaac Gross on LinkedIn.
Amazing. And if you want to find out more about ConnectBooks, just visit our website, connectbooks.com. Anybody has any questions, just email info@connectbooks.com. There's more than one person responding to that inbox. So that's how we can get back to you very fast. And any other questions, just feel free. You can either, reach out to any of us and have any other questions. Thank you all for joining, and it was an amazing webinar today.
Thank you so much.